This is Tyler Coates, your co-host of the Honest Analysts live stream, here with Fibbo Swanee and Joe Saz as usual, and it's another good time to take a look at some charts. I'm seeing this is a very critical sort of inflection point where we could maybe be at the top of a range sort of situation, or it sounds like Fibbo's feel more optimistic. I guess tables have turned a little bit for us over the last week, so that'll be interesting to see what he's looking at. And I've also been paying very close attention to the order book. I think that can be a big help when we get to these critical levels to get a feel for how many sellers are really stacking up, around 20K, if they're kind of shying away as price comes back up there, or if they're building as price moves back up there, can really help to get a feel for if maybe we're at resistance that's ready to break through, or at resistance that is ready to hold. So it'll be definitely a good day to take a look at some of my stuff, and it's always a good day to dive into what Joe and Fibbo are looking at. So how are you doing today, Joe? It looks like you got a little pep in your bounce.
Just listening to some good music. Way to put me on the spot there for a sec. Is there a question?
Like you're like blushing or something. I don't know. It's weird. I was just asking how you're doing.
Really good. Thanks. Really good. Thanks. Just enjoying a quality cigar in a happy place. Gotta say, just been chilling. Been really curious about price. That's for damn sure. But yeah, things are good, man. And you Fibbo?
Yeah, everything's going well on my end. Just kind of actually chilling in Kentucky. It's been kind of cold here. I know other people live in cold areas, but it's pretty chilly here the last couple days. But I've been using the hot tub, so I'm keeping warm.
Nice. I did some ice bath plunges myself yesterday. Met up with Tone, did the Russian bathhouse, and a Russian bathhouse. I don't want to be specific, but NYC and all this fucking garbage. But anyways, had a great time, and I feel like I feel like every cigar that I smoke kind of might be subtracting a little bit of time from my life. And then when I go there, it kind of like makes up for it with the eucalyptus steam room and all that. You know what I mean? So some ice plunges, some eucalyptus steam room. I'm feeling like a new man today.
Well, I'm glad to hear it.
Awesome.
I'm a big proponent of that stuff myself. I'm a guy with no shortage of bad habits that am usually needing to sweat out some toxins or whatever the case may be. And that's actually part of my daily routine is going to a natural hot springs here close to my house. And that really is, I think, adds just a lot to my sense of well-being, getting out there into a natural hot springs, and it makes it very easy to kind of meditate and just get into that sort of zone when it can be more difficult when you're around a bunch of lights and just that sort of stuff. And the healing benefits are tremendous. There's been studies done for like steam rooms, dry saunas, like the ice baths, all that sort of stuff has tremendous impact. So anybody out there listening, if you've got a natural hot springs in the area, it's something that gets up to like $1.08 in that range, and you go sweat it out in there for 30, 40 minutes a day, that can have similar impacts to getting in a good workout in terms of getting the heart rate up and sweating out those toxins that we don't need once the good stuff is all gone. So with that being said, I am interested to start with Joe to see what he's looking at, because I've been just watching this order book very closely. We had a couple quick messages earlier today, and would be curious to see what you're looking at, and then we will, definitely send it over to Fibbo.
Sounds good. It would be my pleasure. All right. So, well, if we're in a range, this is just madness right now. Let me get it out of the 1 minute. let's talk about this in a bit more perspective. Maybe let's go 15. So this is what's really critical, is that the gold mine lit up just now, like just today, early hours of the morning. We had like a solo flare that didn't do much, but then we now have some consistent active gold mine up here.
When did that gold mine click?
0200 ish.
Okay.
So it's like we've been fighting this resistance. It's definitely caused its stalled price a couple times and brought it down crashing. But I mean, I gotta say this is looking pretty bullish to me. The fact is, I mean, even looking on the micro time scale, as I've been watching this, I'm actually not trading right now. I decided to take a little break, but if you notice, we're going from yellow to white. White is a lesser severity, which means that we're actually picking at these ranges. This we're consistently moving. Sellers could be pulling liquidity. I don't know what the case is. Buyers could be stacking liquidity. We won't know for sure. But I'm seeing that we're now going from what was initially a yellow signal and an okay scalp. If you're talking, high lev, that was a shit scalp. So you really like these signals haven't even really paid off yet. And I'm kind of getting nervous that they will, but that they won't for very long. This would be one of the trades where I'm definitely not playing signal to signal. I would be looking to play probably signal to scalp and get out, because this is feeling, it's just because the gold mine, when it shows up, it means business, and we got gold mine. I mean, at one other point in time, did we come back and break the gold mine, or maybe two, maybe a couple, maybe more than that. But this one right here, and this was just a lone fucking island, and he showed up and he got crushed, some time later, hours later or whatever. So I'm not too upset about that. We did check this one. This horizontal range was checked and supported. This horizontal range hasn't even been checked since we've moved up in price. These horizontal ranges haven't been checked. So I do see a possible toppy little action here, a fake breakout, a couple of fake breakouts in this ascending triangle, and a test back to, some sort of, static range, even this cluster, maybe as low as this kind of 19.2 range, low 19Ks. But then I would probably see a lot of support build up pretty quickly, and then we would. I'm getting to the point where I'm convinced that the book is stacked in favor of the bulls and the gold mine. It really only means one thing, and it means price is going up. So I would rather be a hodler right now than an active trader.
Very interesting. So what does it mean to you when that gold wave is on top of the price? Is that a gold?
That is so okay. This isn't gold mine. This is I should maybe make this a different color, but this is the 2.5 to 5% band. This is from price, distance from price. As you know, my trade band is the 1 to 2.5% band, and then this is kind of like a noise band, 2.5 to 5%. Now it's important noise, especially on the sell side, and you can see that noise was important when we started pumping up, getting a consistent set of 1.5 signals, because that 2.5 to 5% range had been sitting there. So we pushed right up against it and we fell. So I do think it's important, but just seeing this wouldn't cause me to put any exposure in one direction or another. Whereas the gold mine, on the other hand, I'm starting to think that the gold mine means probably minimum trend bias, 1x exposure long in this case. So the 2.5 to 5% band isn't my most important band. It's really only the 1 to 2.5 and the 5 to 10.
Interesting. So what about that order? Seeing it in the order book at 19.6, maybe 700 or so, and what are your thoughts there? That is a level that I'm looking at as a critical level. Are you thinking that that's just going to get eaten through or pulled?
So look at what it's doing to the 0 to 1% band right here. It's making us at a negative 77 value in the 0 to 1%, and you can see that it's within 1% of price. Here's 1% right here. So this is I'm betting you. I would bet you push-ups and stuff that most of this is dynamic. It's been the case over and over and over since about 11K that we've had massive walls that have been mostly dynamic in nature. And I believe that this is probably a dynamic actor as well. I think that this person is scared to sell. It doesn't necessarily mean they're a spoofer. It just means that I think this is most likely a large buyer with a cluster of buyers, and the large buyer will pull, or sorry, seller will pull, and there's probably people putting stops here, and this is probably what it's going to take to cause price to rush quickly. I mean, this is, if I was a market manipulator, I would put a bunch of Bitcoin here. I would make people think, all right, well, we're not going to break 19.6, so let me put my stop at 19.601. And when 90% of this wall gets pulled, and there's tons and tons of stops, and this thing's gonna wick to 20K. You know what I mean? Like 19.8 or something like that. So that's kind of what I see going on here. I don't really. I think it's not that significant, other than to expect people to start placing stops there. That would be my best guess.
Very interesting. And I'm definitely glad to get your input there. I was kind of maybe thinking that you'd be seeing some different things just from what I've been seeing on Trader. So that's very good to hear, good to see, and I appreciate it. Anything else you got for us?
Well, yeah, just one more thing, maybe a couple things. So I have to, you guys, did we talk about continuation gaps? Basically, when a CME gap acts as support, in case you don't know, to all those who are new, when a CME gap gets tested and acts as support, that's called a continuation gap. And or it can later be coined a continuation gap. Right now, it might be more speculative, but the fact is, the next, after kind of pumping a ton of shorts out of, a CME gap fill bet, we came up and we freaking wicked to the freaking tippy tip of the iceberg of the CME gap and freaking popped off. So I'm a little convinced that this is a short-term continuation gap. And of course, Bitcoin on the weekly has me a little concerned with look at this value. I mean, we're pretty much nearing the RSI value is nearing the all-time high RSI weekly value as well. We are also above the July 2019 or June 2019 high after the parabolic run-up. So the weekly RSI does have me worried. And of course, we have now stepped into the monthly 9, which is a full 30 days, of course. But 1 to 4 candle correction. I mean, this might be a weird bull market. I guess that's all I'm saying. Could be a weird bull market. I do like 9s as much as I don't like technicals. As much as the order book, I prefer. I did kind of become a trader paying attention to 9s, and that weekly 9 blowout, a little surprising. The RSI is a little hot, a little overbought, and that monthly 9, there's one of these has got to play out. We have 4 bunk 9s on the daily in a row, so I'm going to start betting here that these 9s are going to start kicking in, and it's probably going to. I would hope that the least amount of damage is that it just fills the CME gap and then it takes off. Most amount of damage above 10K would be my guess as well, but we'll have to see.
Cool. Thanks a lot for zooming out a little bit and sharing your thoughts there.
Yeah, and one quick thing. Have you also looked at Google Trends lately?
Yeah, maybe a month ago. It's been a minute now.
If it's been a month ago, then it's close enough. I just wanted to point out the fact that this run versus the Google Trends search versus the Google Trend back then really isn't the same. So I'm still a bit surprised. I'm kind of asking myself, we have had some big players enter the market with big pockets, right? So, what matters more, a small number of people with large purses or a large number of people with small purses? Both, right? But we now know publicly some big names are entering the space. So it's very possible that we have this kind of, isolated, research into Bitcoin causing, you know, a very strong fundamental price increase. And I think it's very possible that a small number of individuals could be driving a large amount of this price action to the upside. So I'm kind of changing the way that I'm thinking. You know, there's always this one realization that someone said a long time ago, that if you're in before institutional money, it doesn't matter what the price is, you're early. And I'm starting to get the feeling that institutional money has been around and has been entering, and is probably, now that they're, you know, I think we might have even said it last time, now that they're public about it, it probably means that they're well positioned, and they're ready to play. They're ready to maybe even change the market, how it behaves altogether, you know.
Well, I agree with the perspective that a smaller number of people is getting a hold of a large amount of Bitcoin is what has driven this bounce, this move from 3,500 up to 20K or so, and that was kind of what I started to talk about maybe around 7,000, was the idea of the capitulation that occurred, and how many liquidations there were, and how much Bitcoin was either sold or liquidated, and then just kind of asking who bought that, you know, who was there to buy up all of those liquidations on BitMEX at $3,500, and
Arthur Hayes,
because there was only a very small amount of time where that was really available. And yeah, sure, we could get into the conspiracies of Arthur Hayes or whatever the case may be, but I'm of the opinion that it's a much bigger player than somebody like that, and that it would be somebody that wasn't only eating up the liquidations on BitMEX, they were also on every other main exchange buying up spot Bitcoin, on, you know, Kraken, Coinbase, Bitstamp, all of these exchanges, so that the floor was provided. You know, like somebody had to provide that floor so that we didn't go to zero. And I don't think it was a ton of people running around so excited to buy. I think it was a very small number of highly liquid and highly skilled traders who that's when they will gain all their liquidity. Like if you're looking to enter 5 billion or 10 billion into Bitcoin, there aren't many times where you'd be able to do that in the matter of a few hours. And a big capitulation like we saw, where the price never goes back and retests that level, is the perfect sort of scenario for the biggest of the whales to come in and gobble up all of the panic selling. And when that happens, once you have maybe a small number of people that just bought up a bunch of the asset from a bunch of panic sellers, now the market is in a position to leave those prices behind and in the dust. So I do think that that what we have seen, that this first leg of the start of a bull market, is very much going to be driven by the biggest money traders, the biggest money whales. And then the second leg is when the institutional money starts stepping in, and that's where we started hearing that around $8,000, $9,000, $10,000, $11,000. I think that was very much a time where institutional money bought, and those are prices that we may not see again. And I also agree with the idea that if you're before the institutional money and you're not one of the, you know, the Tiger Woods of trading, then you're early, and you're either going to have to suffer through a long period of consolidation or look at a price moving sharply against you. So yeah, a lot of interesting ideas and concepts there. So I'm not sure if there's anything you wanted to respond to before I send it over to Fibbo.
No, I was just actually happy to listen to your side of the story, you know.
Well, yeah, that's been my favorite part, is getting to share each of our opinions, because that often offers a really good chance to learn whenever we have good, you know, thoughts on good ideas for maybe different sides of an argument. So I appreciate your attention to my ideas. And Fibbo, any thoughts there before you dive into your charts?
No, the only thing I asked Joe was what time that hit, and he said 0200. The reason I asked is because I had a bullish threshold on the hour come in about 0800. So just a few hours later, it got a little bit of a bullish signal. That's why I was just kind of curious on how close they were in signal.
I would say that's close enough. You know, you being a kind of a long time frame guy, me being a short time frame guy.
Well, yeah, this is on the hourly, so maybe it just took a little while. You know, because you're probably, what were you looking at, the 15-minute?
Yeah.
So I was just seeing how close we were on getting the signal to. I mean, for me, it would have been a buy signal, but I'm being cautiously optimistic. I didn't add longs, but I'm still continuing to hold my longs that I have short term. I just didn't add any to this position, just given, you know, some of the patterns that are kind of setting up. But I'm still bullish, and I still think we're going to hit 20K by the time I'm done talking. No, I'm just kidding. But that would be badass if it did. But no, I'm still cautiously optimistic. I'm still on the bull side. I haven't really switched yet. We did have that nice little correction in the market. I know it was only maybe 17%. It wasn't 30%, but it was something. Here, let me share my screen so I can at least show you what the hell I'm looking at.
I'm going to be racing back after refilling my drink.
All right. Yeah, this is the hour that I was talking about. This is the threshold that hit right here, and that was at 0800 or 8 o'clock in the morning, and it kicked up a buy signal here. So for my threshold, based on the crossover of the ADX here, it started at this candle, which was at 18.9. And so far, we've had a high up around 19.6 or so earlier today. It's so far the break of this little trend line here and the threshold breakout is right at 19.195, and it retested that earlier today and kind of bounced up. I mean, there's not a ton of momentum, but there's still enough there to keep me somewhat optimistic to get up to this target that I've had for this short term. Which is at about 20,500, which is the fib extension off of if this makes a new high, which, you know, it would be an all-time high, basically getting above 20K. The minimum target would be this range between the 127 and the 141, which is, you know, kind of in the middle of that is about 20,500. So that's what I'm kind of looking at on this move to the upside, and maybe that will be the top. I don't know. I'm not in the business of trying to determine where tops are. I think personally, I think it's an act of futility trying to figure out where the top is. I'd rather sell knowing that we've broken down and kind of missed a little bit of the top, knowing that the trend's going the other direction. So I'd be a little more secure, going the other way. But for now, I'm still riding the trend to the upside because I haven't seen enough evidence to get out yet. Put it that way. And so basically that's the hourly. But what I wanted to show here was a couple of things that, I mean, a lot of people are looking at. One of them is when you look at the daily, one of the things that people are looking at the moment is these higher highs, and then on the RSI you're getting some lower lows. So everyone's looking at this bearish divergence that you see in the RSI. I personally think that divergences in strong trends are misleading because I feel like you can get false signals on the way up. So I always wait for the actual divergence to have a confirmation of some sort. And so far I haven't seen that. For one, when you look at the 4 hour, once it broke this threshold and it worked its way back down, the 61.8% level is still holding, and we're still in the bull zone. So from a 4 hour perspective, we haven't even really broken down yet. Yeah, we had that correction earlier, and we had a bearish threshold due to it, but then we come back up pretty quickly, and then we reestablished the bullishness. So this was just a quick little correction. So basically a bearish correction in an overall bullish market. And so far, that's where I got out, and then I got back in on the bullishness here on the 4 hour, and I'm still riding that out. But what I wanted to show was some of the things that people are looking at. One is the divergence here on the RSI, and another one is on the weekly. What Joe was talking about, the RSI is getting up in these overextended areas. So everybody's really concerned about this being overextended, which they should be, because it's a red flag for sure that you're getting it up into an area of exhaustion. However, one thing that I like to look for is, of course, fib levels. And what I wanted to do is I wanted to kind of compare it back to what was happening on the run up from 16 into 17. Yeah.
Do you do fib levels on RSI?
I've never found any use for it. I couldn't find. I know some people probably have or have a way to use it. I've never found a way to make it worthwhile.
It was just
I look at fibs as a psychology or a proportion of price, and the RSI is really not what that is. Not that you can't try to apply fib levels in the RSI. I just could never figure out anything from it. So.
Yeah, you're right, because looking at this, it's just hot.
It's a derivative of it. That's all it is a derivative of. I don't know. I just never could find a reason to use it. If someone does, that'd be awesome. I just haven't really seen anything good on it. But one thing I'm looking at is, when we had the low way back here in October of 15, that's where I'm starting, because that's where my bull threshold was, where it started way back when. And I was looking at all these. Everyone's been talking about these corrections that we saw on the way up, all these different corrections, and they were pretty substantial on the way up. I think they averaged probably 30%, probably on average. But what I look at is, one thing I've always told people, we always ride the fibs onto the way up, but I wanted to look at just the threshold or the movements themselves. So if you go to the top here, you can see the 61.8% level held here. And typically at the beginning of a threshold, it's going to be your most volatile time, or in other words, the 38.2 could definitely break pretty easily. But the 61.8% held on that one. So what I'm doing, instead of taking this, and moving it up to each high, like I normally do, and I'll show you that here in a second. But this is what I'm looking at from when it comes to looking at the overextensions, like this one here on the RSI. We had an overextension here. We had multiple ones here. Even though the market stayed bullish, these were the start of corrections. And so what I would do here is you take this 61.8% as that next leg, and I take the fib from that point where the 61.8% level is, and you move up to the next point right here, up to the next high. And as you can see, the 38.2% level, it wicked down right here. It's probably a little hard to see, but it wicked down to the 61.8%, but the 38.2% held pretty well. So, and then we'll take the low on the 61.8% level right there, and move it up to the next high. I don't know if I hit that right there. And as you can see here, up to that high, the 38.2, it wicked down to the 61.8%, but it held the 38.2. And the reason I bring these up is because these are the levels where we were overextended, and it went down to the 38.2, wicked to the 61.8%, and then came up. So even though we were in this area where it was overextended, the overall bullishness held every time, even though it broke down. So I'm looking at the fib levels here to really give me a confirmation of this being a much larger correction or just a nice little correction in an overall bullish market. And in this case, that's what it was. Because if you keep taking the fib level from each time it dipped, I think the low was in right around here, maybe right there, and you go up to the next high, you can see the 38.2, it wicked down to the 61.8%. I think it did it twice, but it never did it enough to break that 61.8% level. And again, you're at an area where it broke down and then came back up. Now you got to remember, this is weekly, so this is a very long term. And then you had a low here, worked up to the next high, and did the same thing. And then at this point right here, you can go all the way up to this one, and then that's when it started to break down into this point. But even on this one right here, and this one's interesting to me because this is the one where it did get a little bit overextended, but it never got beyond the 38.2 here and continued to really rally up and get us to that high before it started to break the 61.8% finally. And then that's when it broke down into the bearish zone for good, because it went beyond the 61.8% and broke into the bearish zone. And that's where I basically sold. I think it was around 11.7 on average is where I sold out at. And if you take the same thing going this direction, I didn't buy back until this point at about 4,500 after it established the low on here based just on that. So the key to me is the extension or the overextension and where the market has gone. So if you look where we're at today, and we're looking at the fib levels, right now we're overextended, but until this breaks back down into the green section, because back here they had to break back down into the green, and that's when they went down to test the 61.8%, or at least through the 38.2. And wicked down to the 61.8% and didn't last very long. But it has to get out of this extended area and break back down into the green. So that's the first thing I'm looking for, is for this to break down into the green, and it hasn't done it yet. So to me, it's overextended, but it can stay overextended for a while. Back here, this overextension lasted, I think when I looked at it, it was about 7 or 8 weeks. And right now we're only 4 weeks into overextension. So you can see that overextension can last a while. And we could be just getting started on some of that overextension. First level I'm looking for is the 15.1, is the 38.2 at the moment. So if this breaks down into the green zone, you're probably going to get earlier signals, like on the 4 hour. It's going to break down into the bear zone, and that's probably where you're going to start selling out some of your longs. You're not going to wait for the weekly, but what will happen is before you get back long again, you're going to look at some of these levels. If we break back down into this bull zone from being in the exhaustion area to the downside, and so far, we even went down at this point, but it didn't even go down far enough to even consider this to break down yet. So that's one of the levels that I'm looking for to overcome the overextension. So to me, I kind of like to look for the fib levels to give me at least a signal that this thing is starting a larger correction, and I just haven't seen that yet. And another thing is because another person asked me when I showed him this earlier today on my Patreon, was he asked me, well, I thought you took your line from the level and you keep going up. Like this one held the 61.8%. And I said, yeah, I do. And that's just to keep the trend going or not. Because here you go up to that high, you can see it held, and you keep pulling it up to that point. It held there. And if you keep pulling it up, it held there. Keep pulling it up, it held there. And then again, it held there. And then up here, that's when it broke down. And then that's when it gave the signal. So to me, I'm still doing that same thing here on this threshold, where we kept moving this up, and so far we're at this point where the 15.1 right now is where I would think if this thing's going to correct back, that's my first level of defense. Now, if this breaks down into the RSI into the green zone, then that 12.2 could be like a wick to the downside, and to me, I'm kind of with Joe saying like the market now versus when it was back here is completely different. We have so many different players in the market now. It's not just whales, it's also institutional money. So to me, I feel like the shallower fib levels are going to find buying interest a lot quicker now than they would waiting for the 61.8%. I could be wrong, but that's something that I'm going to be looking at, is when this market comes down and corrects back to that 15.1 on what the internals look like. Is the buying interest coming back up? Is the hourly breaking back, above bullish? Is the 4 hour going back above bullish? Those kind of things I'll look for as those levels are being tested. So to me, yes, we're overextended. Should you be cautious? Absolutely. That's why I'm only 30% long and not 120% long. I'm not like overly bullish, but I'm always riding the trend until it gives me enough evidence to tell me otherwise. And that's what I've always kind of traded on, was I want to get as much out of this trend as I possibly can. And that's what I've been doing. But if it breaks back to, I mean, I'll be out of the market before it breaks back to 15.1, because you'll get the sell signals on the 4 hour. But if it, so in other words, from the longs that I'm in on the 4 hour, you know, this moving average is playing as key support. The 61.8% level right here has been holding key support at 18.6. That would be, I'm in at around 18.450 on average, because I bought different levels. But that would be a key level for me. Most likely, if this bull zone on the 4 hour breaks down into the bearish zone, it's going to be on the break of this moving average and this fib level. So I'll probably be out break even. But you know what? I'll take the 30% long risk at a break even, with a possibility of it going to, you know, 20,500 on my minimum target, or even further. Because right now on the 4 hour, my target is these extensions. A couple of different ones I look at comes out to be about 20,400 to 20,005, somewhere right around there. So when you're looking at some of these other, like on the hourly, the fib extension off the hourly is right there at that 25 or 20,500 level also. So as long as this holds up on the hourly, and you know, we're back on this 144 moving average support, you know, because it broke down here. That's when we had that little 17% correction, and then we went back above it, and then we're back at support again. So until this kind of breaks down, which right now the moving average and the extension off of this move is right around that 18.6, 18.7. So that's the level that I'm looking at basically on here also, is on the 4 hour on that moving average. So that's the level I'm kind of watching. If it breaks back, and if it gets 3 settles below there, you know, that's when I think we'll probably be correcting a little bit further. But at the moment, I'm kind of happy where I'm at, and watching the, I lost it here. Watching the, where's my weekly? Yeah, the weekly, and seeing if we are going to, you know, break highs and keep an eye on this extension. So I know there's a lot that I just went through, and I'm kind of, you know, probably starting to ramble a little bit, but hopefully I kind of answered some people's questions when they were talking about it being overextended. The two main things I was hearing was overextension, and then on the daily was the bearish divergence on the RSI. Those are the two main things. And yes, they are signals. They are red flags that this thing could break down. But right now, to me, it's not enough for me, because the earlier hour and the 4 hour are still well into bull zones. Not a lot of momentum, as you can tell. We're sideways, just like what Joe was showing on the order book. You're kind of in this little zone of kind of uncertainty. I would call it my liminal space. So for me, anything between 18.6 and the previous high of 19.9 or wherever it was at, I don't give a damn where it goes in between there. I don't want to do anything until it breaks down below there, or it breaks to the upside and hits some of my targets. So I've been kind of a watcher here. I haven't really done much, except for just updating the charts. I haven't really done any more buying. And the reason for that is, yeah, we do have some red flags, and we do have to pay attention to that, because like you said, the weekly is getting overextended, so we got to watch that. The monthly is on a 9. You know, there's things that you gotta that are red flags, so you got to watch out. So, so right now that's what I'm looking for, and so far it's kind of pushing up. Are we at 20K yet? Nope, we're still at 19.4.
Shit.
Damn.
Thank you very much.
Maybe if I keep talking, it'll go to 20K. No, I'm just kidding. All right. I know there was a lot there, so hopefully I answered some questions that people were asking out there today.
Yeah, thank you very much for going through all that. I certainly learned something. Keep an eye on that weekly RSI to break back down below that maybe 80 or somewhere around there. That makes a lot of sense, and definitely.
Yeah, on the weekly.
Yep.
Yeah. I mean, that's what I look for, and it's based off my threshold zones. Because this one, basically this line, it's pretty close to the 80. It's about 81.72 or so. Because most people will look at either the 30 to 70 or the 20 to 80, you know, somewhere along those lines for their overbought, oversold. And definitely we're overbought. I mean, there's no doubt about it. I mean, when the weekly's up that high, it's parabolic just on the weekly alone, or at least it looks like it's parabolic. But I look for a move back down into the green and a break of a significant fib level while it's doing it. So if it does break down back down into the green and still holds that level, then you look to momentum and you look at some other things and some other indication to say, should I get out or is that level going to hold? Most of the time, it's probably going to break through that shallow fib and wick down to the 61.8%. And then that'll tell you if it's going to be a longer bull market or we're going to switch over to a bear market. And that'll give us that primary, inflection point that on trend that we're looking for, if we want to ride the bull trend or not. But these are a lot of ifs and what's going on. So we just got to kind of let it play out a little bit and see where it takes us.
Love it. That all sounds great. Thank you very much for sharing that with us.
No problem.
I'll go ahead and take a look.
All that information and no questions. I love it.
That just tells you how well explained it was.
Well, that's good. That's good.
So yeah,
I always look at it the other way. Like if they don't ask questions, they're just confused as hell and they don't even ask anything.
I'm glad. I was listening. I'm happy to hear what you're saying, and I'm glad you're addressing the red flags. At the very comprehensive review, analysis there. So
yeah, I mean, you gotta have forefront for sure, because it's at a time where this thing could crash pretty freaking hard if it happens. Or it could go to 25 or 21,000 and then do it then. It could just still get overextended just a little bit further. I'm not trying to be greedy. I'm just waiting for signals to let me know when to get out. And so far, I haven't seen it. But I could be swayed. Show me some other stuff, because I know you're probably looking at some other indications of going maybe the other direction. I'm hoping that you are, because I'm really interested to hear what you're looking at.
Yeah, absolutely. I'll dive right in here. First thing, I figured I'd take a look at a longer term chart to look at this RSI that you guys were looking at, because while I do agree this time is very different than last time, primarily because last time there was no money printing combined with Bitcoin halving, and this time we have Bitcoin halving and money printing, which is like the ideal recipe for a massive run in Bitcoin. So I am very much thinking that this time is different, but I'm still just seeing huge parallels between the current action and looking back to the fractal in 2016. So that's the first thing that I just wanted to take a look at here is this RSI being on the weekly up around 84. When this first happened back in 2016, it was right as we had first approached the prior all-time high, specifically after we broke through that 0.618 level. Excuse me, it looks like that was the time before. So we come up here and test the 0.618 and find resistance there, come back to the 0.382, and this fully resets back down to support. And then that second time we come up and test it was the first time that we approached the prior all-time high, and it came within a whisker. High here was 1163, high on this move 1139. So came within a whisker of that all-time high on this RSI getting overheated. So this is actually a sign to me that, yeah, maybe like a short-term correction is due, but actually it's telling me that this is kind of the first signs of some major strength from the bulls, because we came up to this level 1, 2, 3, you could say 4, even 5 times throughout that bull market. And yeah, when it did get up here, you could start looking for some dip buying, but as Fibbo showed you, it could, if you're a little too anxious, you maybe end up selling here, and maybe the best you can do is buy back around the same price. But the idea for me is that right here, for kind of like a fractal sort of comparison, We had this first real big spike in the weekly RSI coming up here to the 618 resistance. And now that we had the second spike, like we looked at back here, that came within like 20 bucks of the prior all-time high. Here we are within dollars, depending what exchange you're looking at, of the prior all-time high as we're back up in here. So this is really what I have been watching out for and kind of expecting and waiting to see how we react around the prior high, because after we did reject that, it swiftly moved back down to that 0.618 in the matter of like 1 week, 2 weeks, basically moved straight back down. So I've been paying close attention to see if we would just kind of blow right through potentially, or if we started to show some signs of exhaustion as we find maybe some resistance around this level. And if that is the case, like Fibbo was talking, I mean, it's at a spot, and like I said at the top of the show, a critical inflection point for me, where if the bulls can support and keep, and they're just outmatch the bears and they just win the fight, then the reaction to the upside should be very sharp. Whereas if the bears win after a long run of bulls winning, it could lead to a very sharp reaction to the downside. So this action here is what I am keeping in the front of my mind now that we didn't break through and smash through. Last week, I was seeing that we were in a strong position, and I thought that everything was good and that we were going to continue to barrel on through. And now that we've spent a week hanging out around this area, a lot has changed for me and has really started to make me think that we might be in for a range or a sharp correction. And if we did do something similar to what happened in 2016, that would be a move back down to that 13,500, 14,000 level or so. So definitely a key area that I'll be keeping my some orders set, keeping my eye on, paying attention to potential trend line. Would make a lot of sense to have, one of those sharp corrections back down into here. I am still long myself, but I have sold out the max that my rules will let me. So I'm like maybe about 50% long, maybe even a little bit less. So if the market does take off, I'm going to be a very happy camper because I am very long. But if we do correct, I'm going to be in a good position to go ahead and buy a dip, having sold out the max that I can. So seeing some sort of intersection there definitely has my attention. We'll continue to pay close attention to that. So let's go ahead and take a look at the order book before I pull up EMASAR, because like I said, that's basically been the main thing I've been watching here over the last week or so, trying to get a feel for are the bears building off of the 20K resistance, or are they starting to get eaten alive? And one thing I haven't really seen Joe talk too much about, but I've been really liking it since I noticed it available here. If you go to on Trader, if you go to the sharing and you browse for Joe, and then you do Joe Yellow, one of the things that will pop up is this order book top levels. And what I did was just hide everything that wasn't yellow. I'm really interested in these yellow lines where there's a much bigger than normal orders, overwhelming kind of orders up here when these yellow lines pop up. As I understand that would be a ratio that is outside of the average. And now that is showing me that these levels up in here, let's go ahead and take out the signals real quick. So we see that these have been kind of building. They started to get kind of spoofy, starting to kind of put back in a little bit here and there. But the one thing that I'm really paying close attention to here, more so than that I wanted to start with is this order book depth aggregation. And I think that this is just a really, really cool tool, having aggregated the order books across various exchanges. And what I wanted to point out is just how bullish it had been, this whole move, you know, fully green across all exchanges, very bullish. You get one little red blip there. And then once we got up to 18.5, that really flipped strongly, firmly bearish and sustained, saying that to me that from 18.5 to 10% above that, call it 19.8, that there were big sellers and that they were getting filled in a big way in all of this move up here. And then on that reaction down, we see that kind of flipped back bullish, but it immediately flipped back bearish as we got back up to these prices. So that is really showing me strong signs of a range. If we can say that the bulls are in control at 16.5 up to 17.2, but the bears are in control from 18.5 to 19.8, well, that tells me that we should potentially need a prolonged range to let them fight it out to really see who is going to be in control. So potentially something that I would be watching for and have been keeping in the front of my mind a little bit here is instead of that sharp correction back to the 0.618 like we saw last time, and kind of thinking that this time is different, would be really nice to develop some sort of like a ascending triangle here. It's a very wishy-washy, just kind of hopeful sort of situation at this point. But when I'm seeing strong signs of a range in a bull market, and I'm looking for these prices down here around 14, I want to be asking myself, well, what may happen that would cause the price to never return there? And of course, what would happen to cause it to just barrel right through? And one of the main ways that I could see this really being different than last time, and really building a significantly more bullish kind of pressure and strength, would be if we just build strength off of these lows and potentially get some sort of sideways reaccumulation range, or maybe some sort of ascending triangle where, yeah, the bears are in control up here now, maybe potentially, but they get worn out as the bulls move up and up and up and up. And an ascending triangle below prior all-time highs is definitely something that is, not super rare. Like, that's a very good way to break through a critical boundary, is to develop a prolonged range below it to eat away and then build support, eat away, build support, and then you're kind of ready. So the two things that I'm really expecting and trading for right now are going to be some sort of sideways consolidation. I do have bids down in this area due to EMASAR. I'll get into that very shortly. But I do have some stops as well. If those bids get filled and we take out these lows, I want to get stopped out of there and be ready to reload back down around here. So just an idea that I'm keeping my mind on. I am expecting us to come back and retest these lows, and that's where I'll be watching. Do we make a higher low? Do we do equal lows? Do we do a lower low? Do we never come back and retest these, and therefore maybe draw in some sort of trend line like so? Very much with kind of what Fibbo was saying here. There's just we just basically got to wait and see. There's a lot that can happen here. There's a lot that we can talk about and draw and project and think about. But the reality is we just got to wait and see. If this just really breaks through this sort of trend line here, depending on how you want to draw it, I definitely am seeing a very well-formed cup and handle, which is very intriguing. You got the handle, the cup, and the handle, and then on top of that, you have the pullback to the 0.382, and a bit of a sort of flagging type of pattern, that sharp sort of correction down, and the best the best cup and handles are really, you should get a flag in that right handle for the best performers. So that is a situation that I'm going to be definitely paying attention to, but I expect to see some patterns with some fake breakouts towards the tops of ranges. That's something that'll happen time and time again. Let's see if we can find a good example. Say, here you don't really have this is more of a cup and handle where you get the cup, the handle, the move above, and then the quick back move down to support where you kind of trap in the breakout buyers, you stop out the shorts, and then you make that move back down. Here we did get that higher low type of thing. So seeing that cup and handle again is for sure something I'll be thinking about, but it's also something that really makes me think of the beginning of a range where you get it, and if you fail to break through, then very much expect to return back down to these lows. But if you do break through, then very much look out above, especially because it's got that bullish slant to it. I mean, if you've got a cup and a handle that is angled up, and then that means that you really got to kind of get up here to break out, and that would make me think that a very, very sharp move is coming. Okay, don't want to go on too long here, but let's take a quick look at EMASAR. Got a beautiful signal on that last move down that I did not get filled on at all. I was like $25 below this price when we came down. I had an order like right here, and then orders layered, and 0 of them got filled, which was definitely frustrating. But then I got just an incredibly lucky for part of my position. Let's go ahead and pull up another exchange here. Once I missed this once I missed these orders here, and we got this bounce, we kind of got an ascending triangle, we kind of moved off of support. That's when I moved my orders up for some sort of double bottom. I look for resistance from the 50 to push us back to the 200, and when it's angled up like that, that's when I would be expecting a higher low situation, where if my orders are down here, I wouldn't expect them to get filled, and if they did, it kind of ruins the setup and makes that's kind of where I want my stop. So I ended up moving up my orders, and got very lucky to get filled on a weird move on Kraken there. So that was sweet. But now what am I looking at here is I was able to go ahead and trim that as we tested the sky. After this bounce from here, I actually got in here and then just was able to trim it pretty much right away, which was really nice. And this is the other thing that really has me just thinking that a range is coming. Looking here at the cup and handle, looking at the sharp move down into the beach, and then a quick sharp bounce back up into the sky is really reminded me of what we saw during the halving consolidation. So let me zoom out and just pull up this action here. So right here, notice how we got that sharp move down into the beach, cup, and then the handle, and the sky held as resistance, moved back into the beach, and then moved back into the sky, beach, sky, beach, sky, beach, sky. So you kind of ping-ponged in between the support and resistance as you consolidated into this sort of triangle. And the very first part of it, this part right in here is, I'm struggling with this guy. I need some more space. What I'm gonna do, that is really reminding me of what we're seeing right now as we have this sort of cup and handle, beach support, test of the sky, and we'll see if that does go ahead and move down. Let's see, there's something else.
Does that midline, the green midline, mean anything for support for you?
Yeah, absolutely. So that is going to be the 50 EMA, and the biggest moves will happen between the sky and the 50 EMA, where it just kind of melts up and never returns back down here. So that is very important to me. If that level continues to hold and we just keep holding it, then I would really be looking for, another nice move up. But if that level does give, if the 50 EMA gives, that's when the target becomes the beach. So it's holding, and it didn't resist here, and it's holding here. So
now the lower high, where it's kind of like hovering in between the 50 and the cloud, since it didn't come back to retest the sky, or I think I'm calling it the right thing, that next high.
Is it right here? Yep.
Yeah, since that didn't make it back up to the cloud or the sky area,
yep.
Is that where you're getting a little bit more red flag that the midpoint could the 50 could break to the downside? Because all the other times it worked its way back up again and touched it, and this time it's not. So is that like a divergence to you or something based on previous price move?
Yeah, great question. And right now, I would say that there's still that still could happen, and maybe it's still kind of working its way up there, and maybe it's just going to kind of support and just keep grinding. Like, it might still come back up here, and that's not really what I'm looking at. The main thing I'm looking at is really thinking that this is the perfect spot for a trap, where if we can come up here, get a sharp move from 19.3 up to 22. Then what you're going to have is this cup and handle or inverse head and shoulders confirming, and then you're going to have a lot of shorts getting stopped out and a lot of buyers jumping into market buy the breakout, and that's just where I'm very wary of a very nice setup for a trap occurring. So if it does come back up here, I won't be selling because I already did sell, but I think I would be viewing it as a spot to be very cautious and waiting to see if it can follow through or if it does one of those quick moves back down.
Okay, no, that makes sense.
So now we'll dive back into the order book, take a look at a couple more things, and it'll be a good place to end, see if Joe has any thought. So yeah, definitely paying close attention to this order book depth, as now it has turned bearish, and on this whole move, I'm seeing some bears kind of taking over and being in control. Let's put back on the signals here. And the signals for the Joe yellow signals would be something that I just kind of pay attention to in line with these with the yellow top book levels here, as we see these big yellow lines kind of showing some significant resistance from 19.8 up to 19.985. As we approach those levels, I'd be looking for some kind of sell signals to tell me that they're not spoofing, that they're actually really serious about getting filled. And that's all the difference in the world to me, is if you've got these big sellers that are serious and they just want all the liquidity that they can get, and they're just sitting there happy as can be to get filled, versus really taking their foot off of the pedal or even tucking their tail between their legs. That is what I try to pay very close attention to. And as we have kind of, like right here, we've got this level that it disappears and we pop up. But what that tells me is that this guy pulled his order here so that he could get filled here on a volume spike, as people kind of think that we're breaking out. There's probably there could have been more volume right in here than there was in all of here. So seeing that get pulled and then this sell signal come in and cause for a sharp reaction, I'm definitely going to be drawing in some horizontals there, just to kind of give myself a feel for who may be in control of that. Did the seller get eaten up, or did the buyers? And on this move up, we came up to retest the high of that candle. And as we're coming up, we're getting more signals, more bearish signals. And that did hold beautifully on that wick, held again here. And now we're falling below this low, which tells me whoever sold in here is in profit and whoever bought is underwater. And that will be something I'll pay close attention to as we get these signals to just see which way does price move after we get a big imbalance in the order book. And if price keeps kind of looking like it's moving up, but actually it keeps grinding down below these critical levels, something I'm going to definitely be paying close attention to. The other thing, I'm not sure if I've talked about it much, but I really like the FTX order book, and I would suggest anybody to take a look at it. Guys that started that exchange are some of the best traders in crypto. Check the BitMEX leaderboard if you don't believe me. So I believe that they are the ones driving this order book, and I believe that I want to pay very close attention to guys like that because you know, they maybe know what they're doing or something like that. So looking at this big, just violent spike that where you just have a very sharp out of nowhere kind of spike that can be very important, I think. Right here when this happened, we ended up finding some sort of range. And we did get that little kind of head fake above, but this spike here was a critical time in terms of something happened here and the price failed to continue. And then you get it on the downside here, saying that maybe whoever sold here, maybe FTX guys were selling, and now they're convinced that they can buy back and turn what was resistance into support. That's just kind of how I look at it. And it's rare. It's something that you'll not see very often, a big spike like this kind of out of nowhere. And it just recently happened right up in here as we're testing these kind of critical levels based on some of the other order book indicators. So I'm definitely keeping this very much in the front of my mind and very much, you know, maybe looking for something like this as a response, whether it be after we break through and come back, or if it be on a more of a dip buying opportunity. I think that is it. It sure is. Let me just one last glance at a chart. See, yeah, I did want to take a look at the hourly. That's at an important spot right now here as the hourly reversed bearish on that last move, but notice how it failed to resist that critical horizontal. And after it supported it, it has continued to move up. The next thing I look for is the 50 to cross the marker to provide some sort of confirmation of strength. Let's just see if we can zoom out a little bit here. Yeah, it can happen very early on in a trend. And if you fail to have that 50 cross the marker, it kind of tells you that you tried to reverse, but you didn't have the strength to follow through. So that's kind of the first, you know, sign to me that we're ready. And then the second is going to be here, this 200 EMA crossing the marker as well. And that is a definitely a buy signal if we pull back and into the 200 EMA crossing the marker. That is absolutely a good opportunity based on the 1 hour chart. And the 1 hour is also kind of just showing some signs of a range, but just a much smaller range due to just kind of the flatness of this sky, the flatness of the beach and the ocean. It's not angling up and nice and in a strong bull trend. It's more flat, saying, you know, like resistance, support. Definitely seeing some signs of a range there, and that's where I look at the reversal to see how far above this it was able to make it. If it wasn't able to make it too far, that makes me think maybe some prolonged consolidation before continuing. So as the case is, to sum it up, I am holding on to some longs, and if the market takes off, I'm going to be very happy, and I'm going to be up a lot of money because I think it would move in a big way if it does. But if it I'm positioned to buy some dips if it decides not to, and that's exactly where I like to be. It's kind of a win-win situation. If this market dumps from here, then I'm going to be very ready to go in a significant way, and if it takes off, I'm already in a significant way. So that's got me feeling kind of the spot where it could be very liminal for me, and that sort of experience of experiencing this sort of environment in this sort of space is a big part of what has caused me to develop a number of the rules that I have, which tell me to that I can only take a maximum amount of profit, because there are just many times where I think it's the perfect profit taking opportunity, and then like when we tested 14,000, and then the market blows right through. And if I don't hold on to some exposure, and we say I sold out of all my Bitcoin here, and now we're up here testing these levels, now I would be feeling super uncomfortable. If the market took off, I'd be totally left behind, and if it dumped, I would be maybe, I guess, in a better position, but that's where I would be looking to kind of hedge my sort of emotional liminal space as well as my risk, and try to set myself up in a position where I can be in a good situation to take advantage of a market moving in, basically in this situation, all three directions. If it does give us a nice big range between 20 and 16 and a half, then I'll be ready to buy and continue to trim, and that would be excellent. And then if it keeps moving down, I'll be stopped out and looking to buy back. And if we keep moving up, then I will be happy with what I've got. So that's kind of is what has me feeling comfortable right now. And I am going to be paying very close attention, because I think this is, like I've said a few times, just a very critical spot. And if we can support and move forward, then hopefully we'll get some signs from the order book and from the fibs and from the EMASAR. And if not, then I want to be ready for one of those 1 or 2 candle sort of moves that's the only way you can kind of catch them. So that is.
Yeah, I'm pretty similar in your thinking. That's why I still have 30% long, because I've taken the profit that I needed to take, and I'm keeping some exposure. So I'm on the same boat that you're doing at the moment, because I like it, because it is kind of a win-win situation. Because I'm at the point now, if it breaks down, I'm most likely going to get out at break even off that 30%, but I've already made a lot from the previous move. So it is kind of a nice position to be in. But like you said, you got to have some exposure, because if it does go to 22,000, I'd be pissed if I didn't have any, because I'd be like, I had it just a couple of days ago. Why didn't I have it now? But and I like how you talk about your rule like that, of having that rule of taking a maximum amount at a time like that. I like that rule.
I'm glad to hear it. And yeah, I guess that's kind of how I like to go about it on both directions, in terms of I like to scale in and scale out. If I'm ever finding myself needing to make a decision for the full position, like, am I going to, buy or sell now? That's the decision, A or B. That's always a situation where I'm just, I can't make up my mind. It's too liminal. Whereas if I change the decision to how much do I want to buy or sell, then I'm like, oh, well, how about 10%? Yeah, that doesn't quite feel like enough. How about 20%? Yeah, getting closer. If I change that from a binary A or B decision to a scale, that helps to clear up my thought process, both on entering as well as on exiting, and it can also just be a bit of a hedge on the profit take in case market keeps going in your favor. So I'm glad that you like that. And any final thoughts from yourself, Smoking Joe?
I'm pretty, just I see the short-term pullback here, and I agree. I think we're ranging, and we might range for a while, but everything is on the table right now. This is kind of it. Bitcoin has the tendency to have everything on the table at all times, but I feel like more than ever, this is one of the times where anything is on the table. So positioning yourself, if you are choosing a direction and managing that position with proper risk is probably more important now than ever. So just be careful trading. This is a really, really weird time. It's very weird.
Excellent. I appreciate your thoughts. And that brings up one other thought that I have that I can sign off with. And that's the idea that that right now it is very, very risky to be buying, but it doesn't necessarily mean that it isn't a good opportunity. And just one thing that is very important to me that I haven't talked about, I don't know much at all, but maybe I will more, is the idea of position sizing during times like this. And if we're looking at a time like this, and I'm really wanting to buy at a very risky time, when I'm viewing it as a inflection point where the market could move sharply one direction or the other, I can enter like 20% of the exposure. And if the market does explode, the return on that small position will be about equal to a normal size position in a normal moving market. So when we get to these, testing this all-time high, and if I was, just really getting a signal and really wanting to go in, I wouldn't pass just because this is a very risky time. I would just simply scale down the exposure, because the increase in volatility will make up for the decrease in exposure, such that your ROI will be very similar to the upside and to the downside. So something to keep in mind during risky times. Maybe look to scale back on exposure, or during periods of extra volatility, because that extra move will definitely account for the decrease in position size. So hopefully that helps some of you guys out there. Smash the thumbs up button and the subscribe, click the bell, share it with everybody that you think would find some value in what we're doing. And we will plan on catching up with you guys next week.
Hopefully we're in a nice house on a beach here pretty soon is what I would like to see.
That's exactly right. And I guess we'll share one last thing for everybody sticking around until the end. We got a sweet little poster done up here. I wanted to do it for a thumbnail today, but it didn't fit. So here's our poster for the all-time high beach party. Date still to be determined. Once we get all-time high on all the exchanges, we will be scheduling that date. But for now, the location is set, Gulf Shores, Alabama. Anybody who held through the bear market is invited. No cost to attend other than paying for your own travel expenses. So we certainly hope to see some of you guys there. It's been, we've gotten to share, it's been quite an experience we've gotten to share with everybody here. And it would be great to be able to do that at the beach party. So I'm not sure how to end the Zoom here. Let's see if I can just go ahead and end the stream.
I like that. I like that poster. It's pretty boss.
Glad to hear it.
But I think once we break 20K, that's the explosion that I think a lot of people are waiting on, and it's just not there yet. We're just kind of not there.
It's close.
Almost.
Oh, and quick shout out RSVP. If you are interested, if you're even like kind of thinking about it, it's would like to get some sort of head count to see if it's just going to be us three or how many people to kind of expect. So alltimehighparty@gmail.com. Shoot an email if you're thinking about attending, just so that we can start to get a bit of a head count, because going to have plenty of fun activities scheduled, and want to make sure that everybody's included and that we've got enough festivities for everyone. So, all right, we will catch up with you guys later. Thank you guys, Joe and Fibbo, for joining me.
You bet.
Next week.
Peace out.